All right, a quick recap again in the morning, Thursday morning here. I'm just too sick, which is why I'm wearing this ridiculous hat. I'll go to sleep a bit early, but markets absolute turmoil. It ended slightly bullishly. I mean, kind of high of day. They were red overall, but the Swiss National Bank basically bailed out the Credit Suisse, right? Remember, I've been covering Credit Suisse for weeks. Just I knew it was going down, and yesterday was really the day it went down because the I think as a top shareholder, Saudi National Bank just said they can't inject any more money into Credit Suisse because regulatory reasons, but also they probably thought it's going to go down. So anyway, it's ridiculous these bailouts, and at the same time, it's just such a dichotomy. Global central banks are saying, "Oh, inflation is the top priority," and at the same time, they're basically bailing out these banks. So and that's inflationary. So at the end of the day, either we're going to have high inflation. I don't want to say hyperinflation because you've got to reserve that for the Lebanese, the Turks, the Germans of the 30s, the Argentinians. I'm talking about inflation, hyperinflation. I think it's when it's 50% a year, but high inflation. I mean, I'm just going to make up my own definition. I would say that's 10%. So I think we're going to end up with high inflation because they're going to do what's politically expedient, which is to just bail out what needs to be bailed out to keep the system going. And at this point, I think you're going to have a lot more dominoes failing. It's like every day we hear of a new bank and they deserve to go down. I don't care how many companies or other banks go down. These need to be liquidated. These banks need to be just purged of malinvestment. And this is capitalism. Either we have capitalism or we don't. And the longer we delay it, it's just going to be worse and worse. And now it's so bad that they're just too scared to let it fall, I feel. But yeah, as I say, either we're going to have a high inflation or we're going to have the mother of all crashes. And at the moment, we've got a bit of both. So it's really exciting stuff. It's worrying, it's never really a good thing because people lose jobs, and it's better if the economy was run perfectly. It'd be better if we had no wars, but this is the world we live in. Anyway, let's just check out the markets and every sector as I typically do. Again, we had very interesting. Let me just say one last thing. Gold I noticed again was going up when the market was going down. The miners, the GDXs were also going up with gold when the market was going down. I noticed this time Bitcoin was going down with the market. And actually this time the dollar went up with gold kind of. So it's really, and in particular, I'm looking at gold, the miners, crypto, and the dollar because the way they're trading is interesting. They're sort of decoupling to the patterns are changing. So we're going to go over it. Let's look at the S&P. Obviously it was a red day, but closed a high up day. Let's see what happens today. It's not the biggest crash days. I mean, we had the Nasdaq up. The Nasdaq's kind of ridiculous. I don't know why people feel that the Nasdaq is immune to what's happening. I mean, they've got loans. All these big tech companies have loan. The smaller ones too, and everything's connected. So I mean, look, Silicon Valley Bank, right? That's in Silicon Valley. So I don't really understand why people feel that some of these tech companies deserve to be green. Um, I think they'll get dragged down once the market flushes. But anyway, the S&P sort of a little up towards the close, but still a red day. Today, I think we'll have a small green day, not only because the bailout, and I think the banks are already pre-market. Credit Suisse up 20%. Also, we've got the EU. I think the only big news of the day is the EU decision, which will probably be 25 basis points, which is less than they previously anticipated. I think it was 50, and plus it's what the market expects. So it might be a small green day. I want it to be a red day. I think it should be a red day, but I wouldn't be surprised if it's a little green. But then again, at the close, it could have some. If there's no good, positive, surprising news, it could be a red day actually. So I'm not really sure what to expect today. Put it that way. Otherwise, technically speaking, I think you can still expect resistance here, 393 on the S&P. I don't understand why it would go above and close above to sort of rally to the next resistance, which would be this descending line. This is just not warranted. The Nasdaq, like I said, not warranted, closing here just underneath the descending. If we do have a green day and a green close, it would close above the descending, which would suggest it could go further up, which is just completely irrational to me. But you know, I got to respect the technicals. So if it does close above sort of 300, plus it's a psychological number, close above 300, we could rally a little more, maybe to 304, maybe even to 308. Let's see what happens. Dow Jones, and I said, right, the Dow Jones and the Russell, the weakest two. Look at this yesterday. Look at this tail here of the wick. You know, we went to new lows. We closed okay in the high of day. It's a hammer. You got to respect that, and it's above the support zone, which I think makes sense. It's not the strongest support, but you know, if we have a bit of a green day, I'd expect resistance around 32,250, 300. But what I would really like to see, because I do want to see the market go down, I think it should go down, is if we close, you know, below 31,750 at least. I and it might happen actually. It might happen. Um, but yeah, you know, it's a hammer. So still a red day yesterday. Russell 2000 again, the weakest one. Look at this. It's trying to bounce off this support. I think this is very clear support. So like the others, closed near high of day, but you know, again, very red. Let's see what happens if it bounces. It could bounce for a bit, but it's, you know, it will face a lot of resistance up here. But I don't think it'll ever get there actually, because that's a bit of a move that would take a, yeah, I don't see a 3% day. I mean, it could happen because if you have this bailout euphoria, you could have one of those big days up. But I just, you know, there's too much bad news, and a bailout is not great because then it suggests there's inflation, and that means you have to raise interest rates. And if you raise interest rates, the banks collapse, and then you need a bailout, and then you need to raise interest rates. It's just a circle. Like, we've got to stop this addiction. Let's just let it crash. It's just so frustrating. And I'm not the only one. A lot of people are really pissed off. The only people who are not annoyed by this are the talking heads on TV. They're just absolute muppets, those people. But let's see. Maybe we can bounce a little bit. I think these resistance and support zones are very clearly marked out, and they make sense though. So let's just see what happens. The VIX, yeah, I said it deserves to be around 26. We basically closed at 26, but look at this nice spike we had. Again, 30. It's always that 30 zone. It's really not just a descending, it's just a psychological number. So 30 is very, very clear resistance. And if it does venture higher, I think this descending line really makes sense. So very clear resistance. If you wanted to make a nice trade, you could sell. I mean, look at the news we've had for the VIX to not be able to close around 30, and not just not close around 30. Look where it ends up at the end of every day, you know, below 27. So a lot of resistance up there. But here we are around 26. So I think it makes sense. I always said it deserves to be around 26, and that's basically where we've been. So it's good to see the VIX acting a bit normally. I wonder what it takes to close above 31, 32. I mean, it would really have to be a big bank going bankrupt. And, you know, I don't know, maybe I should cover the banks because I do cover those charts in my own personal time. Credit Suisse, obviously, I make a lot of fun out of them, and they deserve it. And actually, I feel quite vindicated yesterday with what happened. You know, Credit Suisse was the number one talk of the day. But there are other banks out there. I mean, look at Citibank. Look at the chart of Citibank. There are other big banks out there that are, you know, just at support, looking weak, terrible charts. So, yeah, okay, JP Morgan, Goldman Sachs, some of them have pretty decent charts. They're very strong, actually. But a lot of these big banks, and if you look at their balance sheet, it's just horrible, really. So, and they're all exposed to one another. So this could really, the dominoes can fall quickly. Anyway, that's the markets. I mean, I think they should go lower. What to expect? We've got to see what happens today. I think the support and resistance lines are quite well highlighted. So let's just respect them for now. Let's look at interest rates, which have also totally disrupted the previous charts I had because everyone just bought bonds in fear. So, and now we've got to, well, yeah, now we've got to look at what the Fed's going to do. Now that sort of return to that game will take place where rates will go up as we price in what the Fed might do. And now people are expecting the Fed to do one last raise, 25 basis points, and then pause. But I'm going to stick and say the same thing, stick to what I said before. You know, rates at 4-5%, that's too much for the system already. So even though, look, the rates have come down, okay, look, the 1 year's obviously been destroyed. The support zones are just all over the place. I mean, at this point, I guess I could put, Might as well just put this. This really, the charts are just, it's a free for all almost. I guess I could put this one here. I don't know. I'm willing to put this here on the 1 year. The 1 year is not too important, but I mean, look at this. It's just absolutely destroyed. I did say that I was going to wait and see how the charts evolve to determine whether I keep these trend lines. Um, this one, I just don't feel like it counts too much. I'll leave it for now. Obviously, they've been destroyed. Let's see if they rise back up. We'll see what happens with Lagarde. Also, the ECB talks. Maybe that moves the needle a bit. And also, I think it's March the 24th that the Fed will raise rates 25 basis points. We'll see how everything moves in anticipation of that. The 2-year, still the most important one. I mean, look, we've breached below. This no longer counts. I mean, I might as well leave it here. This is the low of the period. The next one, I can't believe I'm drawing trend lines below here. Let's see. I reckon we'll just rise back up a little bit today, actually. But there's not much to talk about because the trend lines are destroyed. Just got to let it play out and create its own new pattern now. I mean, I'll just keep adding the support lines below, but I don't see us going lower because if we go lower, it means there's more fear. So a lot more people buying bonds, which means the yields go down. If this was to happen, it means the market's crashing again because that's the current pattern. I just don't see us crashing too much lower today. But I'll adapt and I'll put in new trend lines. I'll just leave it as it is. The yields I can't really discuss too much actually at the moment because it depends on what happens to the general market. Okay, here at least we have some sort of pattern that we can play with. Again, we might just go up a little bit more. If yields get bought up again, yields could crash. Then where do we go? Not sure. I'll leave this in for now. The 10-year, yeah, similar sort of thing. We're at support roughly. Let's see if we go back up. This is the 10-year. 30-year. Yeah, okay. So towards the longer periods, the longer dated yields, 30, 10, maybe even 5, we've got some sort of support and prior patterns that still hold. But the immediate 1 and 2 years, they really were just, they destroyed the technical charts that a lot of people probably had in place. I won't bother looking at the European yields. It's the same sort of thing. British yields. Yeah, I'm not going to bother. This weekend, I'm going to go through the yields again. But again, I think what we need to remember is that bonds are getting bought in fear. And that's what used to work, what we used to, and what I used to price in, especially with the 2-year. I said the 2 year is going to go up, and it really went all the way up. And then obviously we had our crisis because of this. This was the inversion. They borrowed short and bought long term, and that's what destroyed everything. So because this went up, the banks crashed, and that's when everyone bought bonds in fear. So I'll redo this a little bit during the weekend, but I think for now we just have to remember why they're moving the way they're moving. Let's look at the dollar. This is getting interesting because the dollar, it sort of sold off, and I think a lot of people noticed that the dollar selling off in periods of panic is rare. I mean, some people said, okay, it's because yields are going down. It doesn't make too much sense to me because if you're buying bonds, then there's demand for the dollar. It's a bit strange, but respect it. What I did say though is that I don't think we're done with the dollar. I do still think there's a chance for it to go up. And if you were to compare yields versus the dollar's made up a lot of ground because yields got destroyed and the dollar didn't get destroyed much. And look at yesterday, Wednesday, it actually went up quite well. So I placed these two horizontal lines. I got rid of the ascending one because I don't think it counts anymore. So very clear, 3 or 4 horizontal lines. Let's just let it trade in the middle until it sort of breaches one. I wouldn't be surprised if we actually go higher. I think the dollar will restart its behavior as a go-to asset. If you want to call it an asset, it's just cash, really. But cash is king, and I wouldn't be surprised if the dollar just sort of firms up and starts to break out of 106. But otherwise, I'll just let it trade out for now because when you have crazy moments like this, everything gets bought and sold, and you just got to let it sort of settle down. I don't think today will be calm necessarily. Very volatile day again, I reckon. But just interesting to see the dollar sort of firm back up yesterday. So maybe some people have now been alerted to the fact that the dollar might not just go down. with yields. So let's see how that plays out. Let's look at commodities. Copper. Okay, so this was initially the hardest chart for me to read. Now I think it's yields because there is no chart to go by. But I mean, I can understand the reasons that yields move the way they do. But yeah, copper in the end, this sort of descending and this horizontal line was all you needed, and it broke down. And now, I don't know, I mean, it goes back up. Maybe this will act as resistance, in my opinion. We should come back down to this horizontal line. So I'm going to leave this as it is. And, if the market's going down, copper should go down with it. And generally speaking, commodities have gone down these last few days, except really gold and silver, natural gas, a bit of sideways movement, but really gold and silver stood out for me as the only commodities that really went up. Everything else red, even oil. We'll get to that. So yeah, I'll leave this chart in place for copper. I think it's completely correct. Natural gas. This one, there was one update here, but basically sideways grind lower. I mean, I'm in around here-ish. I bought NGAS. It's a London Stock Exchange ETF because that's pretty much all I can buy, given my situation in the sort of resident of the EU. But I bought the equivalent of around here. I still think we're going up. If we go lower, and I think if we do go lower, it's probably not because of the weather, probably not because of even supply demand. It's probably just market oriented, just momentum, sell everything because there's panic. So sell even a good position like gas. I don't know why you'd sell gas here. But I bought my first tranche here. If we go lower, I'll probably buy just above the prior low. So let's say around 2.2. And if we start to flush that and go even lower, I mean, sure, I'll buy that. I'll buy more. Maybe at 2, I'll buy a little bit more. If we go lower, I don't know why we would go lower because this would be, let me go to the weekly, absolute historic lows given where we were at 10. This is a 1000x opportunity if we start going lower than 2. So I'll be buying that. Just, sort of 20%, 20%, 20, very calm stuff. Our maximum position will be 3 or 4% of my portfolio. So I'm used to this. I know how much I can allocate, no matter how much of a buy I think it is, no matter how safe I think the asset is. I will go in, I will maximum put in a certain amount of my portfolio, and I'll go in 3, 4, 5 times, giving it space and time, and obviously each time trying to get the low. So I'd be very, very happy buying all the way down. And again, this is not some Chinese fraud based in the Bahamas. So, I know that all I got to do is wait a little bit. It should go back up. And if it doesn't go back up as much as I think, it'll go back up a little bit, which will probably get me in the green anyway. But I'm sure I just got to wait this out and we can get to 4, 5, who knows, maybe even higher. So natural gas, just to summarize, could go lower, would love it to go lower. And that's what I'm going to say for now. Oil, just amazing stuff. We broke down of what I thought would be a decent buy zone. It wasn't actually, to be fair. It just sort of went, it stopped just once, it went straight through. Now I think we are at a very strong buy zone. Why do I say that? Let me get rid of this. Because if we go back, look at how many pivots there are around here. Let me get rid of this. 1, 2, 3, 4. Going back, I don't know, months, maybe even 2 years. This should be very strong support. If we go lower than this, honestly, if we go lower than this, then it would probably stop just here at the absolute low here, 63, 62, 62. So for me, 63, 62, I'm going to draw these in anyway, although I don't know if you've noticed, but I've stopped using the thicker trend lines, but here they've defaulted back again. I prefer slightly thinner ones because then it's more accurate and you can still see it. But yeah, you can see why I've put in these trend lines, right? I mean, it makes sense. Also, so far, we have actually bounced quite well off this. So I think mid to low 60s, very strong support. I understand oil going down with the general markets, but I just think it's a buy, it's a buy. It's a buy where it is, where it was. So I only own one oil stock. It's a very small one. It doesn't move too much, but I do think it actually moved with oil yesterday. So It was down like 10-15%. I didn't add to it because I was caught up just watching the metals, but I was thinking about buying it, so I might actually buy it. It's Prospera Energy, very small cappy oil stock, which I might add to. It's like 20 or 30% lower than my first tranche. So I think that warrants another add. Um, if it starts to follow the oil price, since I think the oil price is hitting a bit of a low here. So yeah, oil I think is good. Mid 60s, low 60s. You can see why. Uranium, look at this. I finally started to cover uranium. You know, I used to watch uranium a lot before. I think there were a lot of people who were into commodities would watch gold, silver, and uranium. Um, so I thought, why not cover that? And you can see, look at this, bounce right off. This is a bit like oil, you know, going back the same sort of time. Look how many pivots: 1, 2, 3, 4, 5, 6. Definite buy zone. And you know what? I might just buy some CCJ. I keep saying Aramco, Cameco. Um, it's the I don't know too many uranium stocks. I think I have the sort of main 4 or 5 ones correct, but I want to avoid the junior ones because I think you just get wiped out, especially in days like today, periods like today where markets are crashing. It's no time to be in juniors, which is also why I'm very happy that I've gotten rid of a lot of my junior gold and silver stocks because on the way up they do fabulously, but on the way down they just get obliterated, and I just don't need to be in them anymore. You know, when you have very little money, maybe you don't need, but you feel like you need to play that lottery ticket. But when you start to have a bit of money, you just don't need to risk it that much. You can make enough in the sort of medium and senior tier stocks. So yeah, uranium. Actually, I'll be looking at that today. The CCJ stock. Let me just show it very quickly. Actually, I never really go through my uranium stock. So here, CCJ, slightly different chart, but you can see the similarities. You know, towards the lower part. I'm just wondering if maybe there's another trend line in here. Maybe, but you can see, you know, we get down in the low 20s. So far, we're in the mid 20s, but if we go lower, I may start my first position in CCJ. I think uranium is a future energy source. It's just it got hyped, it got overhyped. A lot of people got destroyed buying uranium at the top here, you know, thinking that we were just going to go up nonstop. And if you look at some of these other uranium stocks, you know, look at them. Now they're breaking down. And these are probably good buys actually right now, but I follow quite a few people who just talk about uranium and they really just got wiped out, even though they were correct because they simply were in the juniors, and when the hype faded, they you know they traded it badly basically. But here I am. I'm about to start my position in probably the best uranium stock, CCJ. This is the most senior Western one at what looks to be the low of the cycle for now. And if it goes lower, you know, great. So yeah, that's uranium. Now let's look at gold and silver. So this is still the most exciting and most bullish asset for me. So, and it's where I'm most heavily invested. So that's good. Yeah. So gold really has been going up when the market's been going down. I've been watching very carefully. There are periods where it goes up with the market. It usually does that. So that's why I've sort of called it the invincible asset for this period. Now it's, you know, the thing is you got to respect technically it's had a big move up. Okay, we also, can you see how it tagged this ascending line acting as resistance? So that was quite impressive. I mean, you know, we basically hit 1940. Okay, yeah, 1936 is 1940, and the high is 1960. The difference between 1940 and 1960 is zero. For me, it's zero. $20 is nothing, especially the numbers we're talking about. So we kind of hit the high. Now we've had a massive move up. It's extended. I wouldn't be surprised if it come down quite a bit, actually. I've trimmed my miners because of this. I've sold them all so they're at their minimum level. Okay. Which is what I always do when I think something is overextended. It's what I did whilst this was moving up. All right, let's just say it's $4,000, right? Each stock, $4,000 is the minimum I want. Each gold or silver miner that I own. Some are more senior, some are more junior, and therefore instead of four, let's say it's 3,000, but let's say it's 4,000. The miners go up another 10%. Now it's worth 4,400. I sell 400. Now it's 4,000 again. So no matter how high it gets, the maximum that Newmont or Barrick Gold will be worth in my portfolio is $4,000. That's what I did on the way up. As we come back down, it's worth, let's say, 3,200 because it's come down a lot. I add it back again, it's worth 4,000. And then I trim it again so it's worth 4,000, never more than 4,000. So that's what I'm doing. I'm trimming it so it's always worth a certain amount. And let's just say that's how I trade, right? So I trim on the way up, I buy on the way down, and I generally get it right. That's what I've done here. I've trimmed, so now they're at their minimum amount. If you come back down again, great, I'll buy back because I do think the low is in for gold. You know, the absolute low here. I think we're going to come back down a little bit. Just technically, we've been overextended. But again, what if the markets start to crumble today? What if I don't know, Lagarde says something that moves the dollar a certain way and stocks a certain way, and I don't know, I'm just ready to see how gold reacts to that. Let's say silver also has finally made a move, but you can see it's nowhere near the highs of this period, unlike gold. But I've done my selling now. If we keep going up, I'm ready to keep trimming, but I just don't think we're, at least for gold, I don't think we're ready to break out of this unless there's more shocking turmoil. But what would be interesting is to see what silver does, because if gold does start to go for 1960, silver's going to have to start to make its way all the way up here, you know, at least 23. Because if gold starts to take out 1960, which I'm not ready for, we're talking about 2000 and straight away 2070, 2100, which is essentially new all-time highs. And if we've got that going on, then silver, you know, and this is what I said over the weekend, silver really has some catching up to do, and so do the miners. Speaking of the miners, they really are stuck between both worlds, following the market down and following gold and silver up. Now, the last 3 days, they were generally following the metal up, making up ground. Yesterday, I mean, they closed, GDX was actually unchanged, but mainly because Newmont and Barrick, I noticed, were pretty strong. They were up like 2.5%, whilst all the other seniors were kind of red or flat. So GDX was a bit special yesterday. But, you know, it makes sense that there's 1 or 2% between these two. GDXJ, though, red 1%. I just feel like they followed the market a little bit more than the metal yesterday. So you just have to watch. It changes day by day. But again, if gold starts to take out 1960, it's just gonna, I don't care what the market's doing, the miners have to go up. But still, you've just got to watch both because both are very influential. And you can see the trend lines where I think I will sell if we do keep going up. Of course, I don't need to reiterate that. Let's look at crypto. So crypto also very interesting because, you know, we had these days here where, like gold, it went up viciously. And then here, look at this trend line. I don't know how many people have this trend line. For me, it worked perfectly because, I mean, initially I thought if we take out 25,000, we're going to run, but we had a hell of a tail up here and kind of looked bearish. The next day was red. Today so far is green. I still think there's quite a lot of resistance here. I actually think that Bitcoin follows the market now more. I think it's had its little rebellious move up when the banks had problems. Let's buy Bitcoin. That's the point of Bitcoin. It fixes this, which is kind of true. But Bitcoin still is a speculative asset for a lot of investors. And I think that it will follow the market more. Yesterday, it followed the market. It really followed the market compared to gold. I would see the market go down. Bitcoin went down. Gold's going up. So they were, you know, gold and Bitcoin were opposites yesterday. But 2 days before that, they were similar. So you've just got to watch those charts and see how they're interacting. But for me, the market may move up a little bit today. You know, a small euphoria. Credit Suisse is not going to zero, but I think the damage is done. You know, psychologically, and I think markets should go down. And if they do, I think Bitcoin will go down again. But there should be a lot of support in Bitcoin on the way down, especially around 18,000. But no point in talking about that right now because it's sort of flagging where it's high. So let's just see what happens. Very exciting stuff. You know, I'll finish with the banks because it is in focus at the moment. So sorry, where are the banks here? XLF. Here we go. Makes sense that this has seen a massive drop. This is the ETF for the banks. Uh, so you can see why the Russell and the Dow have similar looking charts, but this really is just an absolute plunge. Small hammer here. You could say this is kind of support, but it doesn't matter about support. It's all based on news the last few days. Yes, we could have a small bounce, quite a big bounce maybe, but if we have one more rumor of another bank, it's right back down again. And then we should have, why do I have this trend line? Kind of rough trend line. Yeah, maybe. Okay, well, you should find support near the old lows, and 30 is a good number. Yeah, that makes sense, 30. But let's see, it's come down a lot. Therefore, it could pump quite a bit. Here we can see some former support, which didn't act as support, obviously, because there was crazy news. But if we bounce, I'd expect this to be resistance. But I would love to see it go lower. And then I got some random banks, basically the senior ones. Let's just see what happened. Deutsche Bank. For me, Deutsche Bank is another one. It's a bit like Credit Suisse, just murdered in all this negative news the last few years. And again, you zoom out, here are some very old trend lines I did. Look at this. That looks a bit like Credit Suisse. It's not at the absolute lows, but small breakout here. But look at this, if it just keeps going down a little bit more, once we're at $8, a small flush of that, we're at new lows. If Deutsche Bank goes bankrupt, the EU just collapses the next day. That's Deutsche Bank, which it's not even hit the headlines yet. Credit Suisse, obviously my favorite. Look at this, just absolute piglet that got slaughtered. Okay, big move up because of this bailout. That's nothing to be proud of. And you know what? That's the best news priced in. We could move a little higher, but 250 should be resistance, $3 big time resistance, and this thing should go lower. But for me, it's the other banks now. Credit Suisse has done what it needed to do, scared everyone, forced to bail out. HSBC, I think that's another one with a really bad chart. Look at that. That's not a good chart. I need to redo my trend lines. I haven't done these in ages, but look at this. If we start to go back down to 25, that's it. It's the last support before new all-time lows. That's not a chart all the way up here looking strong like the other strong ones. By the way, which I mean like JP Morgan, this is a strong chart. This one, it comes back down. It's just got strong support. Goldman Sachs, another strong one, which hit support. Those are strong ones. But Morgan Stanley, another strong one. State Street, strong, but I've seen its balance sheet. Very, very scary stuff. Citi, not strong. Look at that. This is another one. I should actually put the weak ones together because it'd be easier to go through them. HSBC, Citi, Deutsche Bank, these are all very weak. But look at Citi. Never really recovered from 2008. Just absolutely slaughtered. Then just this very weak ascending support waiting to be tested and broken down. There's another 1 or 2 days of a drop in this, and as soon as you close below this, let's say below 40, that's it. Looking very bad, like Deutsche Bank, like Credit Suisse and HSBC. I'm not going to go through all of them. Obviously, we got this one, First Republic, which was one of the ones in the crosshairs. So, and this you could say actually had a strong chart. So even the JP Morgan, Goldman Sachs, Morgan Stanley, and the State Streets, Wells Fargo also, that's also scandalous bank. But that just proves that even if you got a good chart, bad news takes 2 days, you go to zero. So anyway, I'll leave it there. I hope that was of value or of entertainment to you, but it's the banks that are in focus, and for me also commodities, not just gold and silver now, but also some uranium, some natural gas, some oil, and crypto. Everything's in focus, to be honest. I'm just lying. Everything's very exciting. Anyway, I'll make another video. Hope that was good for you.